Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
A poor credit score, even one that is due to a short credit history or maybe just a few small mistakes in your life, can make getting a loan seem pretty much impossible. However, aspiring borrowers may. That's today's podcast on the College Investor Audio Show. Ways to get a loan with poor credit. I'm talking sub 600 FICO score. So let's get right to it. Well, I guess first of all, what is a bad credit score? Why does it make getting a loan so dang hard? Well, a credit score is a numeric representation of a bank's willingness to lend you money. It is calculated based on your interactions with credit. When you pay a loan on time, your score increases. When you miss a few payments or fall into default, it absolutely decreases. There are many types of credit scores, but one of the most popular is the FICO 8 credit score. This is the most widely used credit score. The FICO score 8 has a range from 300 to 850. A score above 700 is generally considered good, and a score below 600 is often considered poor. A person with a poor credit score is considered a bad credit risk. Banks may be unwilling to lend this person money, or they may only qualify for loans with very high interest rates. People with bad credit may also fall into loan schemes that ultimately trap borrowers with poor credit. Loans like auto title loans, payday loans, and other short-term loan schemes can trap borrowers with triple-digit interest rates. It's criminal, really. If you've got bad credit and you're looking for loans, you have to be careful. There are plenty of financiers who are eager to rip you off. We don't like them. Many young adults, especially college students, have a short credit history. Because banks don't see a long history of credit-worthy behavior, a young person's credit score is generally low. When you pair that with a few credit mistakes, such as late payments, a loan in default, or an unpaid cell phone bill, it's easy to have a credit score below 600. But young people should not despair about poor credit. Time and good credit behaviors make it possible to restore your credit in just a few years, even less. Here are some of the steps you can take today to fix your history. Okay, pay all your current accounts on time. Might seem obvious, but current debts are all of your debts that aren't in default. Make at least the minimum monthly payment on time and in full each month. This is the number one thing you can do to boost your score. Reduce or eliminate credit card debt. I love the eliminate part, by the way. Let's stick with that one. Credit utilization is the amount of debt you owe relative to your available credit limit. A lower utilization ratio is generally better for your credit score. If you have credit card debt, pay it off as quickly as possible to improve your score. Watch your credit card balance. Big deal. Even if you pay off your credit card balance each month, you can still have habits that put your credit history in jeopardy. For example, as a young person, my only credit line was a Target Red card with a $200 limit. Since I bought my groceries from Target, it was easy for me to spend close to my maximum limit every month. It's not a wonder that my credit score was pretty bad. Thankfully, I learned the trick to pay off my card after each trip. Within a month, my credit score shot up to the good range. So ideally, you never want to keep your total balance on a card below 20% of the card limit each month. For those with low credit limits, that can mean paying the card several times a month. Ask for a credit limit increase. As with all of these on the list, please be careful about these. If you think you do behave responsibly with a credit card, ask for a limit increase. A higher credit limit will give you a lower utilization ratio and boost your score. You can also ask creditors to remove negative marks from your credit history. If you're starting to clean up your credit, you may want to send a goodwill letter to your creditors. A goodwill letter just states what you want the creditor to do, and it also provides evidence of your improved behavior. Taking responsibility for past errors and being appreciative in tone can make it easier for a bank to say yes. And it feels so good to say yes. Avoid applying for tons of credit when you don't need it. Applying for tons of new credit really hurts your score. It makes you look desperate. and banks are even less likely to issue a loan to a desperate person. So before you take out a new loan or a new line of credit, try to avoid applying for any new credit other than the loan in question. Dispute errors on your credit report. If you've had a bill in collections, there is likely to be an error on your credit report. The errors tend to happen when a bill is sold to collections agents. The CFPB provides step-by-step guidance on how to identify and dispute incorrect information on your report. Credit cards for people with poor credit. Okay, so let's take a look at these. There are a lot of credit card issuers that won't offer credit cards to people with poor credit. However, there are 3 types of credit cards that people with credit problems can reliably obtain. These cards aren't a great form of financing. Credit cards rarely are, but they can serve to help you build some credit. There are things called secured credit cards. So secured credit cards are cards where the cardholder puts down a deposit, like $300, to qualify for a line of credit, say $500. If the cardholder fails to make a payment, the credit card company can keep their deposit. This isn't a great setup, but secured cards can help cardholders build some credit. As a rule, secured credit cards are absolute trash. They have junk fees that can be avoided. The best secured credit cards have no fees and may even offer a small cashback reward. Look for those ones. Retail credit cards. So if you've got a stable income, you might qualify for something like a gas station card, a Target Red card like I had, or other forms of retail financing. Normally, these credit cards offer mediocre rewards, if any at all, but they do help you build credit. Just be sure to use them responsibly and pay them off every time you use them, not just every month. Unsecured credit cards designed for short or fair credit. You may have a poor credit score, but that doesn't mean banks won't issue unsecured credit cards to you. Certain cashback cards like the Discover It, Student Chrome are cashback cards designed for students. Other cards like the Indigo Platinum MasterCard are credit building cards. The lender may accept people with checkered credit history. However, the fee on this card may be as high as $99. Auto loans for people with poor credit. If you've got bad credit, auto financing is an absolute minefield. Buy here, pay here dealerships often prey on people who are desperate for financing and any vehicle. If at all possible, avoid financing a vehicle when you have bad credit. Right now, people with very bad credit pay an average interest rate of 20.45% APR on used cars. Oh my! On average, people with great credit pay just 4.29% APR on used car loans. Look at that disparity. If you must get an auto loan, take a look at these tips. 1. Do not get fleeced on the value of a car. Take a car to a trusted mechanic to get an inspection before you buy any used vehicle. Use Kelley Blue Book to estimate the value of the vehicle, a great tool. 2. Apply for loans at a local credit union or bank. If you are pre-approved for a loan at a credit union, you don't have to worry about the slimy dealership financing deals. When you're approved in advance, you will know that an auto loan fits in your budget. You may also want to use a loan marketplace like LendingTree to find the best options nationwide. 3. Follow the 20-4-10 rule when buying a car. Put at least 20% down, take out a loan for 4 years or less, and make sure the monthly payment is 10% of your income or less. Mortgages for people with bad credit. Mortgages are tough too. If you have a credit score below 620, you're not going to qualify for a conventional mortgage. However, you might qualify for less popular mortgages like the FHA mortgage or a USDA mortgage for rural home purchases. However, even with these options, it's kind of hard to get a mortgage with bad credit. Only 10% of mortgage borrowers have credit scores below 656. The easiest way to qualify for a mortgage with bad credit is to have a spouse with a high income and great credit. If your spouse can qualify for a mortgage on their own, you can sign on to the deed. Then you can contribute to the home payments and participate in the growth and equity. Hopefully, if you end up refinancing, you will be able to sign on the mortgage then. If you're trying to qualify on your own or your income is needed to make the payments, an FHA loan may be your best option. This loan offers borrowers and allows borrowers to qualify for loans with scores as low as 500. You might end up having a really high interest rate, but it's likely to be manageable. And as you build credit, you can always refinance later. Thanks to COVID-19, never thought you would hear that phrase, did you? Refinancing a mortgage may be easier than in previous years. Thanks, virus. The CFPB keeps a list of mortgage relief options, which includes forbearance. However, many lenders are also providing options for streamlined refinancing, even for borrowers with poor credit. Bad credit loan gotchas. Take a look at these. With people with bad credit, you might end up with worse financial problems if you aren't wary of lender tactics. Here are a few bad credit gotchas to avoid. Paying the loudest collection agents first. If you have debts that aren't in default, you need to deal with the payments on these first. Once a debt is in default status, the damage is already done. Paying a collections agent won't improve your credit score. Of course, you'll eventually need to pay off the debt. However, you should never sacrifice your current livelihood for past mistakes. Your old creditors will have to wait until you have the funds to pay the old debt. Title loans. Title loans are a horrible form of debt that could lead to you losing your car. Most people who take out a title loan have to re-up the loan several times before they manage to pay it off. Don't get trapped by these awful loans. Payday loans. We mentioned it, but if a payday loan is your only financing option, you're going to need to look into defaulting on your bills. It's easier, because it's nearly impossible to climb out of a payday loan vortex. So much better to bypass it altogether. Bankruptcy bounce back. Within a few days of declaring bankruptcy, you may be flooded with offers for credit cards and auto financing. This isn't because of your great credit behavior. Instead, it's due to the fact that you can't declare bankruptcy again for 8 years. Pay to improve your credit score. Shady credit repair firms will offer to repair your credit in exchange for a fee. These firms can't do anything that you can't do yourself. Often, they'll dispute every charge on your credit report, only to have the credit bureau validate that everything is valid. All right, so here's a final take on getting a loan with poor credit. Getting a loan with poor credit is not easy, but it is still possible. Borrowers with poor credit must be extra vigilant to price shop and find the best financing deals. Whenever possible, borrowers with bad credit can improve their odds of approval by waiting until their credit score improves. That's all we have for today. I hope that led you in some good directions and gave you some good tips to chew on. Now, if you ever have any questions, you want to see more resources, you can find this article and a whole lot more at thecollegeinvestor.com. Thanks so much for being a part of things today, and we'll talk to you again very soon.